30%, Alicia. Uncle Sam just took a 30% bite out of my W-2. I basically worked from January to April for free.
And yet, billionaires like Elon Musk and Jeff Bezos regularly pay a true tax rate of close to zero.
That's illegal. It's rigged. They're dodging taxes.
It's not rigged because they're breaking the law, Nick. It's rigged because they're playing a completely different game with a completely different rulebook. You're trading time for a heavily taxed salary. They are using the buy, borrow, die strategy.
Buy, borrow, die? Sounds like a terrible mob movie.
No, it's the ultimate blueprint for generational wealth. Welcome back to Nick and Alicia Invests, the channel where we decode the psychology of money.
I'm Nick, the guy who just wants to buy a nice sports car without getting destroyed by taxes.
And I'm Alicia. I'm here to fix your money mindset with math and behavioral psychology.
Before Alicia ruins my dreams of buying a brand new BMW, hit that subscribe button. If you want to master personal finance and learn billionaire secrets, subscribe to Nick and Alicia Invests right now.
Today, we are answering the million-dollar question: why the rich don't pay taxes. We're going to break down the exact tax loopholes that create true financial freedom.
Okay, so explain how the rich avoid taxes, because my accountant says I owe another $3 grand, and I'm ready to riot.
Let's start with phase 1 of the buy, borrow, die strategy. Buy. When Nick invests his time at a 9-to-5 job, he falls into the W-2 trap. Your salary is taxed immediately. The federal government, the state, Social Security, they all take a massive cut before the money even hits your checking account.
Yeah, tell me about it. It's painful.
But when Alicia invests, she doesn't focus on earned income. The wealthy focus on net worth. They take their capital and buy appreciating assets, like stocks, real estate, and businesses.
Right, but if your stocks go up, you still pay taxes.
Only if you sell, Nick. This is where unrealized gains come in. If you buy a stock for $100 and it goes up to $1,000, you made $900 on paper. The IRS cannot touch unrealized gains.
Wait, so if my portfolio jumps by $1 million in a single year, I owe zero taxes on that growth?
Exactly. It compounds completely tax-free. This is why the rich don't pay taxes on massive net worth jumps. The golden rule of tax avoidance is simple: never sell. Selling triggers a taxable event.
Hold up. If all their money is tied up in stocks and buildings and they never sell anything, how do they buy the yachts? How do they buy groceries? You can't pay for Wagyu beef with a stock certificate.
That brings us to phase 2, borrow. This is the part that will completely rewire your money mindset.
Borrow? Like go into debt? Debt is slavery, Alicia. I'm paying off my 3% car loan as fast as humanly possible.
And that's exactly why the middle class stays trapped. For the wealthy, debt is not a burden, it is a tool. It is tax-free spending power. Instead of selling assets and triggering capital gains tax, they go to a bank and ask for a loan using their assets as collateral. It's called a securities-backed line of credit.
A what?
A securities-backed line of credit, or SBLOC. The bank looks at their $10 million portfolio and says, sure, here's $5 million in cash at a very low interest rate.
But they have to pay that loan back with interest.
Yes, they do, but let's do the math. Let's say their SBLOC charges 3% interest, but their investment portfolio continues to grow at 10% a year. They are making a 7% profit on borrowed money. This is called positive arbitrage.
Wait, loan proceeds aren't taxable income, are they?
Exactly. When the bank wires that $5 million from the securities-backed line of credit, the IRS sees zero income. That's $5 million of completely tax-free spending power. This is the core secret of how the rich avoid taxes.
My mind is melting. You're telling me good debt actually exists?
Absolutely. There is good debt and bad debt. Bad debt is borrowing money to buy things that lose value, like that luxury car you want. Good debt is borrowing against appreciating assets to build more wealth. The wealthy use good debt to fund their lives while their investments compound.
Okay, but Alicia, eventually the Grim Reaper comes calling. They die. The loans have to be paid off. Don't their kids get hit with a massive capital gains tax bill when they finally sell the assets to pay back the bank?
Welcome to Phase 3, Die. And no, they don't, because of the holy grail of tax loopholes, the step up in basis.
Step up in what now?
Step up in basis. Let me give you a simple example. Say a billionaire bought a stock 50 years ago for $10 a share. Today, it's worth $500 a share. If they sold it while alive, they'd pay massive capital gains tax on that $490 profit.
Right, because they realized the gain.
Exactly. But when they die and leave it to their heirs, the cost basis is magically reset to the current market value. The IRS treats the inherited stock as if the heirs bought it today for $500.
Are you kidding me? So the $490 profit over 50 years,
Poof! Evaporates into thin air. Zero capital gains tax.
that is insane. That's the ultimate wealth building hack. That's generational wealth on steroids.
It is. The heirs inherit the assets tax-free thanks to the step-up in basis. They sell a tiny portion at the newly adjusted cost basis to pay off the bank loans, the debt is wiped clean, the family keeps the vast majority of the wealth, and the cycle starts all over again. Buy, borrow, die.
This explains so much about wealth inequality. But Alicia, this is cool for Jeff Bezos. What about the regular viewer? Nick invests a few $100 a month. I don't have a $10 million portfolio for an SBLOC. Does this even apply to me?
It absolutely does if you shift your identity from a worker to a capital allocator. The principles of the buy, borrow, die strategy apply to anyone. It starts with investing for beginners. You have to stop prioritizing paying off low-interest debt.
But I hate my mortgage. I want to pay it off early so I can be debt-free.
Why? If your mortgage is at 3% and inflation is at 3%, the real cost of that loan is zero. If you aggressively pay it off, you're killing your liquidity. You're trapping your cash in an asset you can't eat and can't spend.
So what should I do instead?
Take that extra cash and start investing. Buy index funds. Buy real estate. You want your money growing at 8% or 10%, not saving 3%. This is a massive part of personal finance that people get wrong. It's called opportunity cost.
Okay, so I should be building passive income instead of paying down cheap debt.
Exactly. Passive income and capital appreciation. Let's talk about phantom income versus phantom debt.
Sounds like a ghost movie. What is phantom income?
Phantom income is the invisible, tax-free growth of your assets, like unrealized gains in your stock portfolio or your home's equity going up. The wealthy maximize phantom income.
And phantom debt?
Car leases, subscriptions, consumer loans, middle-class traps that drain your wealth but don't show up on a standard balance sheet. The goal of Investing 101 is to eliminate phantom debt and rapidly accumulate phantom income.
Okay, let me make sure I'm getting these tax strategies right. Say I buy a house, the house goes up in value. Instead of selling it to get cash, which triggers taxes, I use a home equity line of credit to borrow against it. Then I use that borrowed money to buy a rental property.
Yes, that is your own mini version of the buy, borrow, die strategy. You are using good debt to expand your wealth.
Wow, I am literally borrowing against my asset to buy more assets.
Precisely, this is Investing 101 on a whole new level. You cannot save your way to wealth in a system designed to inflate. Inflation eats cash, but if you hold assets and borrow against them, inflation actually erodes the value of your debt while inflating the value of your assets. You win on both sides of the equation.
Okay, I see why the rich don't pay taxes now. They are legally using inflation and leverage to their advantage. But I feel like there's a catch. Borrowing to invest sounds risky.
Leverage cuts both ways, Nick. If you borrow money to invest and those assets drop in value, you can get wiped out by a margin call. This isn't an excuse to be reckless. Master investing for beginners first. Build a solid emergency fund. Diversify. Don't over-leverage.
So, no borrowing against my entire life savings to buy volatile meme stocks. Got it.
Please don't. The real secret to wealth building is avoiding tax drag.
Tax drag? Like when taxes drag me down to a state of clinical depression every April?
Basically, think about compounding. If you lose 30% of your gains to taxes every year, you don't just lose 30%, you lose the compound interest on that 30% for the rest of your life. Over 40 years, tax drag can reduce your final net worth by 50 or 60%.
Half my wealth just gone to the IRS?
Yes, that's why mastering tax avoidance through legal tax loopholes is just as important as picking the right stocks. It's why wealthy people build massive taxable brokerage accounts, not just 401ks. A taxable account gives you the flexibility to use a securities-backed line of credit later in life.
So when Nick invests, he needs to think about how to eventually borrow against those investments. And when Alicia invests, she's already 10 steps ahead, planning her step up in basis for her grandkids.
You're catching on. The system isn't going to change, Nick. If you wait for the tax code to become quote-unquote fair, you will be waiting forever. The government incentivizes investing and building businesses. If you do what they want, you get rewarded. If you just work a W-2 job, you get taxed.
Okay, my mind is completely blown. I'm canceling my order for that luxury car. I'm going to start stacking assets, focusing on unrealized gains, and applying these tax strategies today. I need to stop complaining about how the rich avoid taxes and start acting like a capital allocator.
That's the true lesson of financial freedom. Don't get angry at the system. Learn the rules of the game. Use these billionaire secrets to your advantage. Keep buying, never sell. And when you need cash, borrow against your assets to avoid the capital gains tax.
It completely changes your wealth building timeline. If you guys want to stop working for money and start making money work for you, smash that like button and subscribe to Nick and Alicia Invests. We are dropping new money mindset videos every single week.
We covered a ton of ground today about taxes, investing, and the cost basis reset. It is the ultimate path to financial freedom. But Nick, what if someone is already making a great salary, but they still feel completely broke at the end of every month?
Oh man, I have been there. If you're making good money but your bank account is always empty, you need to watch our next video. Click the video on the screen right now titled Making Six Figures but Still Feel Broke AF? Here's why.
You don't want to miss it. See you in the next one.